Hello, everyone. Welcome back to Navellier Market Buzz, episode 15. I'm Crystal Navellier, and I'm joined again this week with my father, Louis Navellier. Dad, this was quite the interesting week. I'd like to start with what you thought about Friday's payroll report.
Well, it was kind of in line with economists' expectations. They were expecting 220,000. We got 227,000. There were some interesting details. October was revised higher to 36,000 up from 12,000. And then the other probably the most important thing is that unemployment rate rose to 4.2 from 4.1. The Fed's obsessed with unemployment, so that means the Fed's going to cut rates on December 18th. The other interesting tidbit was the labor force participation was 62.5%. That's the lowest since May. So between that and the higher unemployment rate, the Fed definitely is going to be cutting rates on the 18th. Of course, then we'll get a new dot plot. We'll get some new guidance. And so Wall Street rallied on it because they know the Fed's going to be cutting rates.
Now, what do you expect from the Consumer Price Index report on Wednesday?
Well, it's kind of the same as the previous months. We're just waiting for owner's equivalent rent, which is called shelter costs, to crack. You're going to be showing an exhibit here that shows that if you throw out shelter costs, the Fed's essentially in line with its 2% inflation target. Other countries around the world have inflation under 2% because they don't have the housing rental inflation that we have. So rents are softening around the entire country except for New York City and Baltimore. Baltimore is being redone, spruced up a bit. So and housing prices are being cut. You know, it's quite interesting. The main thing is that as soon as we get owner's equivalent rent to crack, the CPI should start falling under 2%, and then we'll rally. So whether that's on Wednesday, whether it's in a couple months, it's coming. We just have to have the data catch up.
So then what do you think about the Producer Price Index report on Thursday? Do you think it'll be more favorable than the CPI?
I hope so, because the dollar is very strong. So everything we import is getting cheaper, and commodities are priced in dollars. There's all this tariff talk. Even though Biden increased tariffs and everything, it really didn't show up in the numbers. Now, I will add that the price of good inflation, wholesale goods, on the previous month was running at a 2.4% pace. It was running at a 0.8% pace several months ago. So you could argue that there's some inflationary forces on the wholesale level. But I think the strong dollar should be pushing prices down. Probably the best example is BYD, which is the big car company in China, is demanding a 10% price cut from all its suppliers. So, that just keeps, there's deflation in China, and that's evidence of it. Europe's in a full-blown recession, so they might be discounting their goods soon. So hopefully we'll start to import that deflation, and it'll show up on the wholesale report.
I was actually quite surprised that on Thursday, on a down day, that my account was up.
Yeah, well, what's going on? We're still in this washing machine agitation, for lack of a better word. And so when a stock's up one day, it'll be down the next, and if it's down, it'll be up the next day. What was obvious on Thursday is there was a flight to quality, and we have a lot of quality stock. We're obsessed with finding high alpha stocks that to move independent of the market. Most of our high alpha stocks are also low beta. Some people might wonder, why don't you recommend Meta or Palantir? That's PLTR. It's a hot stock out there. And the main reason is they're high beta, low alpha stocks. So we're looking for high alpha, low beta that often zig when the market zags. And so that's why we had a good Thursday when the market didn't.
Do you expect this kind of washing machine agitation to persist?
It should die down. It's caused by tax selling, year-end window dressing. Usually the second half of December is a lot better than the first half. So December's a lot like October. It finishes strong. So we're going to get a turbo boost from the Fed on December 18th with the rate cut, new FOMC statement, new dot plot. And then, of course, everybody's in a holiday mode then. And then finally, what happens is the last week of the month, which is between Christmas and New Year's, is a great time. If you have cash to invest, that's the week I recommend, because we will be surging in January. We're going to have a strong start to the new year.
I'd love for you to talk a little bit more about how the holiday shopping season is going to shape up.
Well, we had an ISM service report that did slip. Now it's still growing. The way ISM is, anything above 50 signals growth, but it decelerated abruptly from the previous month. We were all taken aback by that. The same number of industries were still reporting growth. So it could have been just confusion over the election. But because the election was decisive, and we know what's happening, we know uncertainty. That usually helps promote consumer spending. So I'm expecting a good holiday shopping season. One thing that was interesting is Lululemon announced this week, and they gapped up after announcing it's not one of my stocks. They noticed that their sales in America were soft, okay, and all their sales growth was coming from elsewhere. I found that to be interesting. We really are in a world with specialty retailers, so you got to have the right retailer nowadays. So, Crystal, speaking of specialty retailers, last week we talked about Revolve Group, and I think you know a lot more about this stock than I do because you're a customer. So can you explain to me what makes this company special and why the hell did they open their first store in Aspen, Colorado?
Well, what's interesting is that they kind of started with more of a online base. They have their headquarters is in LA. They have a store there, but they really don't have any other stores. So it's actually quite interesting that Aspen is the place that they decided to open up another location. They're a great store. It's kind of more high-end stuff. It's a little bit more pricier for like the average consumer, but it's very LA and it's very like she. Lots of nice dresses. If you're looking for something for the holidays or New Year's, that's definitely the place to shop. But they were really relying on a lot of people just hope like going on social media and seeing influencers. And again, they really don't have any real stores where a lot of people, like in New York, it's surprising they don't even have one there. So I don't know. It's pretty interesting that they decided Aspen was the next location.
Well, that's a fascinating point. Well, first of all, you have friends in Aspen, so go visit the store when you're there. But a direct sales model is definitely a way to go. We saw that with e.l.f. Beauty. The more you can sell direct to consumers, the more efficient you are. And that's part of the productivity miracle in America. So it looks like they're on the right track.
So now kind of switching on to international news, can you talk about the chaos in South Korea and France?
Sure. Well, South Korea is very confusing because the president and his wife are, under investigation, and so he declared martial law, but only lasted 6 hours, and he undid it. So obviously they're going to need a leadership change over there. The president's very, very unpopular. Occasionally the legislatures get in physical fights with each other, But that hit the South Korean market. It didn't spread, so that was good. So it seems to be isolated to South Korea. France is just a nightmare. Europe runs on coalition governments. Before I get to France, Germany's coalition fell apart. Olaf Scholz, the current chancellor, his party only has 16% of the vote in the last regional elections, and then he teams up with the Greens, which have 10%. So only 26% of Germany is governing Germany now. And that's why they had to declare elections. And we expect Mr. Merz of the Christian Democratic Party to prevail because he's got the most votes. But we'll find that out in February. France had a similar situation. Macron declared a snap election, even though his party did very poorly in regional elections. Somehow he was able to put a coalition together, even though his party didn't have the votes. But the way it works in France is the prime minister controls the budget with the legislature, and the legislature is controlled by Marine Le Pen of the National Party, and she just wants France to stop spending and wasting their money. And so the prime minister had to resign, and Macron has to find a new prime minister. Now, he gave a defiant speech on Thursday night where he said, "Hey, you just reelected me. I want to serve my 5-year term." The problem is nobody wants this guy. So France is headless now. Now, of course, this weekend, everybody's at Notre Dame. Marie Le Pen will be there. Macron's there. Biden's there. Trump's there because Notre Dame's been reopened and redone. We'll see if we get any hints. But Europe is headless right now. People have to realize that Europe is in a recession. Their retail sales fell 0.5% last month. Germany fell 1.4%. But what's really destroyed Europe is, unfortunately, the Paris Climate Accord. It all started with the farmer protests. The farmers not only had to give up 30% of their land to return to natural state, they had to cull their herds, which literally slaughter their animals. So, for example, in Ireland, they have to kill 6,000 dairy cows. And the protests are all over Europe. And the French farmers are really good at protesting. They build blocks, they block streets, they pour manure over everything, and then they light it on fire. When you do a political map of Europe, it looks like the political map of America. It's mostly right-wing parties, but the ruling elite remain in charge. So we'll see if the ruling elite can get ousted, and Macron is certainly part of that. So right now, your leader in Europe is Meloni, the Prime Minister of Italy, and she's very popular, and she's a wonderful speaker, but Europe has no leaders right now.
Well, finally, I'd like to ask you, what are some of your fundamental A-rated stocks right now?
Sure. CRNT is A-rated. It's very, very powerful. It's starting to oscillate a bit, but we like it very, very much. The other one I really like is CLMB. This stock is pulled back this week. Phenomenal buy near term. ELMD, Electromed, also pulled back. Phenomenal buy. And FTI is a specialty company I like. What makes the fundamental A stock special? Scoring the top 20% of all our fundamental factors. And this is probably a good time to discuss our latest back test. So you can show a chart of our back test. It shows that the top 65% of stocks in our 6,000 stock universe that scored high on our eight-factor fundamental model are doing well. And that we did this at the end of November. August, it was only top 55%. So the market's starting to broaden out and fundamentals remain crucial. But when we mix the fundamentals with our high alpha stock to get our total stock grade, you can see the top 20% of stocks, the A-rated stocks, are the best. Early in the year was only top 5%. So this market is starting to broaden out. The catalyst for the small cap rally has been the strong dollar. What's happening, going back to the Europe discussion, the euro's at a 2-year low against the dollar. It looks like it's going to break a buck. And so all these other countries around the world have soft economies. A lot of them are going to have falling rates because the ECB is going to be cutting rates. And it's probably going to allow for a lot of rate cuts next year. The interesting thing is we will not see that on the December dot plot from the Fed. But if the ECB has to cut rates 4 or 5 times, trust me, it's going to drive our treasury yields down to 3%. And last I looked, the 10 years at 4.2. So, this is very, very interesting right now. And it really triggered a big small cap rally. The reason the strong dollar favors small caps is half the sales of the S&P are outside of America. There's one other stock I should mention is Guidewire. This is a company that makes insurance companies more efficient. You may know that Allstate and Progressive are capturing a lot of market share, especially in tough homeowner markets where other companies have fled. There's a State Farm commercial that's showing a flooded kitchen, and then they basically say, "Oh no, you don't have to call your agent. You just go to the app and fill out your damages." That's Guidewire. Okay. Anyway, that stock had an incredible beat. Sales beat by over 3%. They're up over 27%. Earnings beat by much bigger magnitude, and the stock sold off on Friday. That stock will bounce on Monday. This is part of the oscillations we have in the market. So anytime you see a stock with strong sales, strong earnings, that provide good guidance, and it gets hit in profit taking, expect it to bounce. So that's probably our best buy this week. And that's a large cap stock, just so you know, it's in our large cap portfolios.
Well, great. Thank you so much for answering all my questions. And thank you to you all again for liking and subscribing. Once again, if you have any questions, please feel free to leave them in the comments below. But until then, we'll see you next week. Thank you.